Right, let's take a look at your market news. Asian stocks were higher as investors turned to material and machinery companies for economic recovery. In Japan, the Nikkei slightly lower, while the Hang Seng Index a third of a percent higher, and the Shanghai Composite Index up by 0.1%. European markets were slightly higher today as market watchers observe the political situation in the United States and the different scenarios for that country's economic future. Brexit talks are continuing remotely after a EU member of that negotiating team was infected with COVID-19. So let's take a look at the rest of the European and other markets. Right, let's get some insight into the markets. Warwick Lucas from Galileo Capital joins me via Skype now. Warwick, very good afternoon. Thanks so much for your time on SABC News this afternoon. How has South Africa's rand performed this week and why?
Hello, Nzinga, and to the viewers. Basically, the South African rand has been generally doing well compared to other emerging markets, largely because I think that there appears to be a sense that the reform program proposed by government is getting some kind of traction. And I think that really is what's making the difference with the dollar versus the rand as opposed to dollar versus a Brazilian real or Indian rupee and so on, is that initially I think there was great cynicism. We'd just been downgraded and our economy had been hammered by COVID and COVID lockdowns. And now I think a sense that there's some traction coming through from government, I think, is creating a different narrative, and long may it last.
All right, let's speak about the dollar then. How are they doing in light of what seems like looming political instability in the United States?
All right, so I think when we look at instability in the US, look, I think there's obviously internal ructions as to how is the final count coming out. But I think the overall sense is that Biden at this point is considered likely to run through the post and take the presidency, and that then means that the kind of trade war approach that was taken by Trump is off the table now. Trade wars are basically something that is very currency strengthening, and with the view of Biden as essentially more collaborative and less likely to put one in the eye of his negotiating partners and so on. I think that kind of underlying support for the dollar has basically waned. Net result is we basically have a much weaker dollar in the court at the moment, and I think all things being equal, provided that narrative is correct, I think we're likely to continue to see a slightly soggier dollar.
All right, so the World Health Organization yesterday, Warwick, issuing an advisory about Gilead's remdesivir not being effective in treating COVID-19 hospitalized patients. I mean, that was kind of considered a hope at some point, and there was lots of excitement even in South Africa about that. What's that doing to their share price and the value of the company, perhaps?
Okay, so I think Gilead's problems are quite a lot bigger than the issue of whether or not remdesivir works or not, even though it was a very expensive drug. I mean, a full course was coming in about $2,300 a round. It still wasn't really big enough to make a massive difference in Gilead's life. But essentially, their problem was that they have, I mean, it's a very large company. but it's got a lot of different line items. And I think, what a lot of people might have forgotten about pharmaceuticals in the whole COVID-19 environment is actually, for many pharmaceutical companies, it hasn't been a great experience at all, because a lot of other treatments have been kicked out. People have either neglected other treatments, they haven't been able to pay for other treatments, or they've neglected other medical problems and they haven't been to see their doctors. I mean, most private practice doctors this year have actually lost money. They've had to borrow from the banks to keep their doors open. And in fact, it's been a very, very difficult time for them. And this is also going to be reflecting in many drug companies' profiles. So in the case of Gilead, who are strongly dependent on assorted HIV-type drugs, liver drugs, hepatitis, and so on, this has actually wound up being quite a tough year. And in fact, their share price is down. And it's actually been a tough environment for many drug companies.
Someone who isn't having a tough time is Pfizer. So the EU could pay more than $10 billion to buy hundreds of millions of doses of COVID-19 vaccines by Pfizer, BioNTech and CureVac. So what's that doing to their share price? There must be quite a lot of excitement there.
Okay, so with Pfizer, we've actually had the kind of problem that I spoke about earlier with drug companies. Their share price has done a bit better than Gilead's, but it's basically just flatlined. And where you've really seen the action has indeed been in these vaccine producers like BioNTech and CureVac. And the reason for that is that the vaccine market had been, up until this point, relatively not that large compared to pharmaceutical as a whole. And the prospect of a COVID vaccine for those companies is quite intriguing, because, I mean, we're talking about some very, very large volumes and very large repeat volumes, because the sense that one is getting on the COVID type vaccines is that, albeit that they might be quite effective, these are not one jab and you're done for life. These seem to be jabs that would need to be refreshed once a year, which means a massive shift in the vaccine market.
All right. Warwick, let's come to South Africa now. There's been yet another CEO appointed at Texan Property Fund, this time a permanent appointment. Is the market reacting in any way to yet another announcement of a CEO?
Okay, so Texan has certainly had its issues. It's had an extremely tough year. I think the fact that this is an executive who has been in place already since July on an acting basis and now permanent has possibly added to some stability. I think the key issue for Texan is that he can now execute on an ongoing basis, and in particular that the program of property sales and deleveraging can continue. And this is in fact a problem that has been general across the property sector boards, that they have, for example, had property sales done but not transferred because they're struggling to get them through the relevant courts and or assorted municipal transfer offices. So there's progress, but there are also bottlenecks.
Mm-hmm. So Tiger Brands audited results out, share price at 201 Rand 50 when I last checked. What's happening there?
I was quite surprised at the market's response to those results. I mean, on the face of it, they looked quite positive. To me, it looked as if those numbers were higher than the consensus expectation was, but perhaps the tone of the language was a bit more muted than players might have looked for. I see that they have basically made big strides in terms of selling off the meat business, where they'd had their original listeriosis problems. So I think that in terms of portfolio tidy up, they've made progress. That's I guess there's a lot of variability right now in terms of expectations on companies and prospective responses to the results. To me, Tiger Brands looks like a fairly reasonable holding action under the circumstances.
And that's all we have time for. Warwick Lucas from Gilead Capital, thanks so much for your time and analysis. Our resident Friday afternoon analyst here on Point. It's time for a short break.